You're watching us live from Johannesburg. In Cape Town, I think there are various ways of describing what the Finance Minister Tito Mboweni has done, and I can't find the number of words that I need to be using here. I am thinking, did he bring a knife? Where some people expected he would be bringing in an axe, or perhaps he should be bringing in a bazooka, or did he pull a rabbit out of his head, or did he just fudge everything? We all scratching our heads. Just the top line numbers is what I'm going to give you at the moment. So we are looking at a budget deficit of 0.9%, no, not 0.9%, sorry, 6.8%. This is at the peak, and this is for 2020, and this will be the highest in 18 years. So budget deficit 6.8%. Right, from an initial projection of 6.5%. Debt to GDP ratio, this is expected to peak, according to the numbers that I have here, at 71.6%. And we're also looking at what I referred to earlier, the fight with the unions. The government are looking to save as much as 261 billion rand through various measures, including a 160 billion rand reduction in the national wage bill. In the studio with me to talk about this budget, Kyle is still with us. Remember, he was with us earlier when we previewed the budget, so it'll be interesting to see if his numbers came through. He is PwC Tax Policy Leader. And we also have in the studio with us Professor Yanni Rousseau. He is Interim Head of Wits Business School. Gentlemen, welcome back. Thank you for coming and sitting with us, Yanni. Let me start with you. Your initial impressions.
My initial impressions, the deficit before borrowing is very large. This is as a result, amongst others, of the Minister giving tax breaks in terms of adjusting the brackets on personal income tax. And then the big surprise is the fact that the civil service remuneration budget increases by only 1.5%, which means it's only notch increases and promotions. There's no money for a general increase. And despite the fact that the minister budgeted for no substantive increase over the notches and promotions in the civil service remuneration bill, the deficit still comes out at 6.8%.
So did he play the magician part?
Now, something must give here. If the civil service remuneration bill adjustment, if that doesn't work out, this deficit's on its way to 8% of GDP.
Okay. Kyle?
Yeah, so surprising, to be honest. I didn't expect that he would do what he did. It's in line with what we were hoping and wishing for, but surprised that he did what he did, as I say. Yeah, so the expenditure reductions were certainly more than what we expected would actually happen. The 260
Too optimistic, do you think?
260 billion rand over 3 years. I mean, I think they'll certainly get there in terms of the 100 billion rand, which has essentially been allocated to the various programs and so on. As Yanni was saying,
so that's not going to be spent.
It's not going to be spent. They've cut that off the baseline in terms of the programs. I mean, that's essentially going to come out of goods and services, I would imagine. And then 160 billion rand on the wage bill. As Yanni was indicating, that's where the do or die lies insofar as this budget is concerned. On the tax side, again, surprised. We spoke earlier about 10 billion rand worth of tax increases having already been penciled in the 2019 budget. That didn't even come through, so they've scrapped that. So you could, even without any tax increases, additional tax increases, you could see that as a bonus, because that was, we already told that was going to happen. So there has actually been, if you like, effective tax relief that's being given to taxpayers here, which is really surprising.
Yeah.
But I would add is a positive. It's market friendly, it's business friendly, it's consumer friendly.
Yeah, I think we need to zero in on these savings, because this is where the budget is going to rise or die, right? And this is what the minister said, quote, "While some of these savings are good for the fiscus, in many cases we are also making difficult and painful sacrifices. It is therefore important that we direct our constrained resources to areas that have high social impact and have the largest economic multipliers. We shall undertake spending review to ensure that we achieve this objective." On the unions, this is what he said. Working with the public sector unions, we have over the past 15 years sought to improve the lot of public servants. We've committed significant resources for compensating them every year as we have tried to increase their numbers in recognition of their demanding workloads. However, we aim to save 37.8 billion rand in the next financial year, 38.7 billion rand in 1 year. This is more than one way in which this goal can be achieved. Organized labor understands where we are. They have made constructive proposals on a range of issues. I want to remind you of the statement that COSATU issued that is in the papers today. If there's going to be anything that attacks labor, this is a declaration of war. I want your thoughts in terms of the ability of the minister to deliver on the 38 billion rand in the next financial year and on the 160 billion rand over the next 3 years.
I think it's going to be very difficult. There's a real risk that he won't be able to deliver that. I'm not sure what the legal position is insofar as that wage agreement is concerned, whether that's legally enforceable or whether government can force a review of it or not abide by the terms of that. You get this, he's left the door open for further negotiations in terms of how that burden of the reduction in the wage bill is shared across the spectrum of the public sector. It remains to be seen. I imagine it will be loaded towards the top end, so you would probably still see some increases at the lower end, and possibly even actual reductions in pay at the top end. But it's all a balancing act in terms of what agreement they can reach with the unions in this regard, and it's going to be a real battle.
Absolutely.
Because they've been vehement in their opposition to this, and in fact they warned the minister that he dare not actually say anything in the budget about this.
Professor Rizzo?
This is really do or die. I've warned about this problem for the last 5 years. You remember I've used the word fiscal cliff before. So we will have to see how this plays out. As Kyle has pointed out, it might be spread unevenly over the remuneration structure. It might also be that there's a moratorium on new appointments and hence a reduction in headcount that will give a bit of maneuver.
Would you be able to find enough money by doing those kind of adjustments?
Not enough for general adjustment. This is really no general adjustment.
What needs to be done for him to be able to achieve those numbers? Is it a reduction in headcount? Let's call it for what it is.
A reduction in headcount plus no general civil service remuneration adjustment from 1 April 2020. We also have to remember, though, that the 3-year wage agreement was entered into when the assumption was that our economy would grow at 2.5% this year. I've seen the assumptions in the budget is 0.9% growth. My own projection is 0.5% growth. So the assumption...
Are you factoring in the impact of the coronavirus?
Not yet. Not yet. So the wage agreement 3 years ago was entered into on a wrong assumption about growth. And because of the wrong assumption about growth, the agreement entered into 3 years ago can simply no longer be afforded. So something had to give, and in this case, the government had to bite the bullet.
The credibility of this budget will hang on those numbers, the achievement of those numbers.
Yes, indeed. And the further concern is, although we now have practically a freeze in civil service remuneration, the deficit before borrowing is still budgeted to be 6.8% of GDP. So even with a freeze, in a practical freeze in civil service remuneration, we're still running a record deficit. So we must make the point, this is not an austerity budget. This is a very stimulatory budget. The minister is really aiming to get some economic growth out of this budget.
I can't get it out of my head that the minister is proposing that there will be no salary increases for civil servants when we know all the past negotiations have started at some point double digits and have come down ever since, where the government has got to climb down. I am leaving that one hanging for a while, but I wanted to come back to you and raise the issue before we look at the bonds market and its reaction, to talk about the fact that one of the major things that the minister said was that there are no major tax changes.
No, they aren't, and as I said, that was a surprise, and that's market friendly. what you're seeing, and maybe there's a bit of a theme in this budget, is that there's a shift away from public sector government spending towards relying on the private sector. He spoke about it as a general proposition, but you can see that coming through in a number of the pronouncements, including in relation to the tax as well. So he's tossing the ball, in a sense, to the private sector, saying, here you go. No tax increases. In fact, I'm giving you a little bit of tax relief over what the expectations were. Trying to stimulate some business confidence and consumer confidence, and hoping to in that way, amongst other things, to ignite some growth, which is what has to happen. We need to essentially reduce the size of government and the inefficiency of spending insofar as government is concerned, and pass that ball to the private sector to start stimulating the economy, which is what he's trying to do.
Absolutely. It sounds like the minister has been able to pull a rabbit out of his hat here. One, stimulatory, like you said, and to an extent you're saying he's trying to get the private sector going, while at the same time saying, it is austerity, guys, we're not spending any more on wage increases. Well, how is the market responding to all of this? I told you before he started speaking, around 15.25 to the dollar. We are sitting at the moment at 15.13, 12 cents and counting. That's the gain in the rand. That is the picture that you're looking at. In fact, it is running a little more, so we are slightly below that 15.12. So it's a 15.11 to the dollar at the moment. What about that other side of the market, which is a big part of South Africa's capital markets, the bonds market? For that, let's go to Rashad Taib, fund manager at Abax Investments. Hello, Rashad. Is there a party going on in the background?
So there is a little bit of party going on where bonds have rallied in line with the currency, as you just mentioned. So we're seeing a rally of about 10 or 15 basis points in the bond market, which means that people are looking at this quite positively. As you said, Minister Mboweni has managed to pull a rabbit out of the hat. So he hasn't increased taxes, and he's managed to keep the deficits and debt expectations in line with what the MTBPS was. So I think the reason you're seeing this rally is firstly because we've gotten used to negative shocks every budget. We're always expecting the worst when these budgets come out because things have been bad for such a long time. And just the fact that it hasn't deteriorated further, I think the bond market's just breathing a sigh of relief. That's helped the rally. Also, Tito Mboweni, in his comments after the budget, he said that he doesn't believe that Moody's is going to downgrade us next month, which I think is quite a strong statement. He says they believe they're going to see the budget cuts come through, and therefore he's thinking that they're going to give us the benefit of the doubt. So I think people are relying on that assessment. So, cutting 160 billion from the wage bill is a stretch target. I think we're going to have to see whether that comes through or whether this is just fanciful thinking and just a hopeful notion type of budget.
Yeah, Rashad, you guys, of course, put real money behind these assets, but we talk here from Johannesburg, and we have nothing on the line, so to speak. But we're questioning the ability of the minister to achieve those targets. But clearly, the market seems to be believing in the numbers. Though, I just wanted to say that rabbits and hats and those kind of tricks are things of the past.
Yeah, I mean, those are for magicians, and I think there's no magic because we have to deal with the reality. And unfortunately, on the negative side, which is what I have to try and focus on, is that we're sitting with a situation where we've had a debt to GDP ratio in the mid-20s, just before the financial crisis. It's incrementally increased 55, now it's sitting 61, and we even with this positive budget, we're still seeing it going to 65, 69, 71. So that debt trajectory that we've been presented over the last few years, which effectively heading to some sort of debt trap, that hasn't necessarily changed. So longer term, I still think we've got a substantial problem. And if you're relying on 160 billion in terms of wage cuts, and you're still delivering such a negative debt trajectory, I think that the bond market is looking very short term and saying, okay, Moody's might not downgrade in March, but the longer term debt trajectory still looks quite scary to me.
Rashad, thank you. Thank you for your insight and input. is a fund manager at Abax Investments. He is in Cape Town, close to where the minister has been speaking. We're still hoping that we'll be able to also speak to Peter Montalto, Head of Capital Markets Research at Intellidex in London, to get an outsider's view of this budget, because we're certainly seeing positivity in the markets in terms of what that budget has done. When we look at the all-share index on the JSE, from a loss of more than 1% before the minister began speaking, we are now sitting, there you go, 0.4%. That's a reduction in the loss that we saw earlier. Clearly, some of those moves, of course, impacted by the Rand hedge stocks, which would have been coming back with that reduction in the Rand losses on the day. In the meantime, I also wanted to bring you breaking news. Breaking news, yeah, I've got to say it like that because it is breaking news. Who reports in the middle of the presentation of a budget speech? That's the question. Answer, a company with a lot of stuff to hide. What's that company? Come. So Come coming through with its unaudited, unreviewed, condensed, consolidated interim results for the 6 months ended 31 December. What do they say? Well, they begin positively. Revenue up 3% to 3.8 billion rand. But let's listen to this. Earnings per share down 543 cents per share to a loss per share of 120.5. So it's a swing from a profit to a loss per share. The company is talking about the impact of this. It is because this is as a result of the loss allowance relating to the South African Airways settlement amount, which declined by 183%. Initially, the company expecting to profit by 169 million rand, but now it has had to write it off. And so Come, coming in and sneaking those headline earnings per share down 546%. All right, we'll continue our discussion on the markets, on what this budget means. And I wanted to remind you, in the studio, I've got a tax expert, Carl here, and I've got Professor Yanni Rousseau, who looks at the macro picture. Let's go back to the macro picture. So the minister expects the economy this year to grow 0.9%. I said to you earlier, your number of 0.4%, I think?
Oh, 0.5.
0.4,
0.5.
We're quibbling.
We are quibbling about decimal points.
Indeed, that's how bad it is before coronavirus.
Before coronavirus can put us into a recession this year.
Again, we're coming back to the credibility and believability of the numbers that the minister presented.
Well, in short, the economic growth projections of 0.9% for 2020, 1.3% for 2021 and 1.6% for 2022, much more credible than the numbers used before, where growth in the region of about 2.5% per year were regularly penciled in and regularly did not realize. We have a sporting chance to achieve these numbers if we do a few things right this year.
What are those?
Amongst others, if we get the economy growing, if we get confidence, as the minister clearly hopes from this budget, going, and if we start seeing investment coming through.
I'm hearing a lot of ifs.
Yes, but the budget is about if. It's a lot like your household budget. You sit down with your household budget to say if this, if that, if that. And a government budget is nothing else but a household budget with more noughts.
Yeah.
And please, I should not take credit for that remark. Apparently Gerald Ford was the first to say that's how he looked at the US government budget. He just cut off enough zeros until it looked like his household budget, and then he thought along the same lines.
Except I think someone needs to be telling the finance minister how to do it. So Kyle, if I can come back to you.
Yeah.
So no major tax increases we got from the minister. We also got a lot of focus, if you like, on the wasteful expenditure, though we did not get any specifics. He did say, though, that he was strengthening the National Prosecuting Authority by allocating more resources. I don't know what else stood out for you in terms of, I don't want to be negative, but I am trying to find positives, so please find me some.
No, there are plenty of positives, and one of the things is the indication.
Believable positives, please, if I may emphasize.
Absolutely. Well, if he's true to his word, then these are very positive, and this will help instill some business confidence. Is around the proposed, he says here, and I'll quote, reduce the corporate tax rate in the near future to help business grow and so on. And he's
saw
talking
that
about
line.
how he's doing that is going to be
Yeah.
through base broadening, insofar as the corporate income tax base is concerned. We'll have to wait and see exactly what those proposals are. We don't have that detail yet, and I'm sure it's in the budget review documents in terms of how they intend to broaden the corporate income tax base. I have some ideas around where they will be going with that. But that's a positive signal that's been sent to business and so on, and will help to stimulate investment, is that very announcement that they will actually reduce the corporate tax rate in the
What's
near
your
future.
understanding of in the near term? Is that 3 months? Is that 6 months? Is that 1 year?
Well, we don't know. It would have been great if he'd said,
But in
if he'd laid it out and said, well, we're going to reduce it from 28% to 27%
From
in a year's
October,
time, and then
yeah.
we're going to go to 26 and 25. You know, if he
And the
said that,
quantum
that
of
would have
it as
been
well.
wonderful if he'd done that. Yeah,
Yeah.
exactly. He hasn't done that, but at least there's a signal to business from an investment perspective
Yeah.
that the corporate income tax rate is going to be reduced. And that will make us more competitive insofar as international investment is concerned, foreign direct investment.
Yeah.
And bear in mind that corporate income tax is
Yeah.
the most damaging of all the taxes.
Sure.
So it is really investment friendly.
Yeah. There were a couple of things that were missing. I think we discussed it during the break. NHI, no mention. ESCOM, peripheral mention.
Now, NHI, no mention. I find this astonishing in view of Mr. Ramaphosa's letter of Monday, more or less announcing NHI to be introduced from the middle of this decade, despite the fact that the hearings on the NHI bill is nominally still being undertaken. So Mr. Ramaphosa was probably out of order with that letter. Coming back to ESCOM,
Yeah.
I'm very relieved to see in the budget speech the remark, we will propose a new law to stop excessive salaries at public entities. I really find that encouraging. Public entities
Does he have the power to do so?
well, government is a very powerful place, and these are their companies, so they can pass a law to put these salaries under their control. I've argued for a long time that the executive salaries at publicly owned enterprises these salaries have gone completely out of hand. The salaries plus the bonuses are not commensurate with the risk that the management assumes in these organizations.
But is there no danger here,
So
Yanni?
for one,
Yeah.
there should be no bonus payments in SOEs, period. It's not justified at any level
Even
in
though
any
if
way.
you're making money?
Even if you make money, it's your job to make money, that's why you get a salary. Number two, the bonuses started driving their decision making and their behavior. So this thing has gotten completely out of hand, and incidentally, it started with Coleman Andrews more than a
200
decade
million
ago,
rand.
getting
I'll never forget
232
that.
million rands at SAA. The government should have made laws back then.
2002,
Yes.
2003.
This is long overdue, and the government should rein in these salaries and should also improve transparency at these
In terms of
publicly
governance of
owned
parastatals.
enterprises. Please, I have one proposal. The government should make a law tomorrow that all ESCOM contracts must be published on the ESCOM website. ESCOM is a monopoly operated for the account of taxpayers. Why can they argue that their contracts are secret? There can be nothing secret at ESCOM. Just publish all ESCOM contracts for public scrutiny.
Is there no danger in your proposal that you take out that incentive from the managers of the public enterprises, and you're going to attract the kind of management also that is sort of attracted to that kind of compensation? No pressure, guaranteed salary, and the best talent is going to go in the private sector.
Well, there are many organizations that do not pay bonuses. You do not get a bonus if you're a good teacher. So the counter argument is there are many millions of people in South Africa doing their jobs diligently and performing better than the management of the state-owned enterprises and not getting bonuses. You are paid a salary to do your job diligently, do it properly.
Okay, you said they should be done tomorrow.
It should be done tomorrow.
It should be done tomorrow. Can I come to you? So the page in front of me is, these are the excise duties to keep pace with inflation, the minister says. So your favorite a bottle of whiskey, 750 ml, now will cost you R3 more. We know when the retailer adds margin, it's going to be a little more. And then there's tobacco. Any surprises in there for you?
No, it's exactly in line with what we expected. I mean, bearing in mind that government has a targeted tax incidence or targeted tax burden when it comes to alcohol and tobacco. And certainly,
what is that targeted tax burden?
Oh, it varies from, depending on whether you're talking about spirits or you're talking about beer and you're talking about tobacco and so on. So I don't know those off the top of my head.
Sure.
But certainly over the last couple of years, the tax incidence has been somewhat higher than that target. So limiting it to inflation, I think is exactly what we expected. Although, I mean, it's a perennial soft target, isn't it?
Yeah.
But it's exactly what we expected, and it's not to say that it will always stay there. That could potentially in the future increase that targeted tax burden. But I think there certainly are some concerns, particularly in tobacco with illicit trade and so on as well.
Absolutely. Then there's also the tax on e-cigarettes, right? But someone is just telling me, my producer actually, that the e-cigarettes is going to drive, the tax on the e-cigarettes and all these other cigarettes is going to drive young people to cannabis because there's no tax on cannabis.
Perhaps, yeah. That didn't, I guess that didn't come as a surprise. I mean, there have been calls for that from certain quarters for a long time. So, not and in fact, I think government had already indicated that they were going to look at taxing e-cigarettes. But a 75% tax burden is a high tax burden. And remember, you still got to consider that there's VAT on top of those excise duties as well. So, it is a significant.
But we've got to heave a sigh of relief. There is no VAT increase here.
Yeah, that would certainly come as a big sigh of relief to everyone or to all taxpayers in general and so on. But the biggest sigh of relief, I think, is from the individual personal income taxpayers and so on, that they haven't faced any increases. And in fact, they've got some moderate tax relief as well. Because we were already sitting at a very significant tax burden insofar as in fact, we're sitting at a record tax burden from a personal income tax perspective.
Yeah. My sense as I sit here, and obviously, I mean, we're trying to understand this budget. It will take quite a bit of time to get everything all in, but is that either the minister has performed a small miracle or we're going to find he has left out some things that should have been part of this conversation. We're going to take a break. When we come back, we're hoping to be able to join Peter Montalto from that's a research company, that's Intellidex in London, and we're also helping to go back to Rashad in Cape Town for the bond side of this story. For now, let's drink some water, or is it a coffee, or is it your last cheap whiskey? Yeah, because come March 1, it's going to be higher. We are talking about South Africa's budget, which has just been presented by the Finance Minister, Tito Mboweni, in Cape Town. We are in Johannesburg, the capital city of Africa's financial markets. So let's take a quick look at where the Rand is. The Rand is an important barometer. Of course, it is easily the most tradable currency on the African continent. That is the Rand picture that we are looking at the moment. Some more gains. Remember last time we were sitting at 15.12. Well, it's swinging as you can see clearly, but come on, we're talking 15.10 to the dollar. Subtract, that's a 15-cent move in how many hours? In just under 2 hours. It's a big move. I was a currency reporter before. Okay, on the JSE front, as you can see, we have swung the other side. Positivity coming into the markets. The market likes what it has heard. Let's go to London and get the view of those who are looking at us from outside. They also sit closer to the rating agencies. And we are going to be talking now to Peter Montalto, who's head of capital markets research at Intellidex. Peter, your impressions?
Well, this was an absolutely fascinating budget. I mean, this was a surprise. It was a much greater focus on cost cutting than on revenue. which was a surprise. The other big, I think, issue was obviously a declaration of war against the unions. The kitchen sink was thrown at the public sector wage bill. And that basically, I think, is going to be an interesting attempt to realign politics in South Africa. I think in particular, we're going to be watching I think the high likelihood of a public sector strike coming through at some point this year. But also really raises the credibility bar, I think, for the budget. There's clearly a lot that has to go right now to realize 160 billion that's been penciled in this. And let's not forget overall that the debt still doesn't stabilize, even with all this move on the public sector wage bill. I think that's really the long-term challenge that still hasn't been answered as a result of this budget.
Yeah. So, Peter, we saw big moves on the rand front, as I was saying, a near 15-cent gain on the day. On the bonds market as well, we have our guy in Cape Town, Rashad, and he was telling us that the market is actually celebrating that budget that has come through. From your side and the fund managers that you speak to, the investors that you talk to, what would seem to be positive here that the market is believing and the market is liking?
Well, we've seen a cut certainly to issuance levels coming up, particularly for government bonds. There's also going to be less dollar bond issuance in the next fiscal year as well. So as a result of the bond market, I think the real uncertainty here is going to be, as I said, on delivery from here, and the chances of a Moody's downgrade or not, and if we can get into delay for that. I think given these moves coming in, on the statement of intent around the public sector wage bill, at least, we can at least now see a delay from March to November. So now looking much more at a November downgrade, I think, than a March downgrade.
Yeah, I'm going to come back to you on that. I want a little more detail in terms of what Moody's would have been looking at, and also the credibility of the numbers. I mean, that we are raising questions about. In no way are we doubting the numbers of that the minister has presented here, but we are asking the questions, should we believe them? Let's go to Cape Town, where we have Rashad. Rashad, so you're hearing the view from Peter there that perhaps what this has done is to head off that downgrade that many people have been penciling in for March 27. Could that also be part of the reason why we're seeing money coming into the markets? And where is it coming from anyway? Is this local money, or are we talking about foreign funds coming into South Africa because of the surprise, if you like, decision of the minister to take on the unions?
Yeah, I think the last few months have actually been reasonably positive. Not just foreigners, but also locals have been buyers of bonds. You saw the 10-year yields above 9, 10, even closer to the 9.15 level, and people saw a bit of value there. Even the local fund managers have been buying bonds at those levels. And whereas in November last year, Moody's was quite pessimistic on the potential for a good budget, and they were indicating that they were going to wait until the February budget, and then if they didn't see significant action, they would look to downgrade. A lot of us had penciled in the 27th of March for a downgrade date. Now, given what the budget that is presented, I think the expectations of that began to get pushed back, and now with this budget, I think people are thinking that, if they can hit that 160 billion target in terms of cutting expenditure, maybe Moody's delays the downgrade until towards later in the year, probably November. The problem we sit with is that the debt trajectory hasn't changed. So we're still looking at a situation where we're adding 5 percentage points of debt to GDP every year. So we're going from about 61 to 65 to 69. So that debt trajectory continues to increase, which means that even if we can avoid the downgrade for now, the next 6 months, even 12 months, it's an inevitability which the market will have to face at some point in time. We've just essentially being able to kick the can down the road. We haven't addressed the proper structural debt issue yet.
Yeah. Can I come back to you, Kyle, and ask the question that we were discussing during the break, whether this is South Africa's, sorry to use English terminology, Waterloo moment? I don't know. What can we compare to in South Africa in terms of import as to the significance of what the minister has just done in terms of taking on the unions here?
Yeah, so when we were offline, off air, sorry, I spoke about, I asked the question, is this South Africa's Margaret Thatcher moment and so on? Mm-hmm. And if we're going to achieve that 160 billion rand, one would think it has to be, because the unions are not going to take this lying down. We're probably looking at a strike later in the year. Mm-hmm. And the question is, what is the appetite? Are we in there for the long haul? Yep. Are we going to see a breakup of the tripartite alliance? And deal with this issue once and for all. It remains to be seen what the appetite is.
Yeah. Professor Yanni Rousseau, does it have to come to that? Could Mboweni indeed be able to persuade the unions that this is in the national interest and that we can all do this together without having to fight each other?
Well, Mr. Mboweni's first challenge will be to consolidate the cabinet behind this strategy, because the cabinet is also divided on many issues. So it will be necessary to consolidate the cabinet on this. Then it will be necessary to consolidate the ANC, not the tripartite alliance, consolidate the ANC's position on this, and only then can the negotiations with the trade unions start.
Can we assume that he's got the cabinet behind him? Because this document, while he presented it,
it's a cabinet document.
It's a cabinet document.
But I must just stress that we tend to forget that things can go really wrong, as happened in Ireland in 2008, where it was necessary to cut civil service remuneration by 19% on average. They literally cut salaries. Here we are offering an outcome of freezing salaries, which is much less painful than cutting salaries. And if we do not get this right this year, next year or the year after that, we might very well have to cut salaries, because we will simply reach levels where we can no longer afford the civil service remuneration bill. So this might be the small pain compared to the potential big pain if we don't go down this route.
Before we go there, I wanted to take to the second part that you spoke to. So the cabinet behind him, the ability of Tito Mboweni and those in cabinet, and I say that with reluctance, to take on that wing of the ANC that does not see things the same way. Do you see him and that team being able to do that?
What I see is one thing. What I hope is, yes, indeed, I hope they are able to do this, because this is our last chance. We are at the precipice of the fiscal cliff. If we don't take this painful medicine now, we're going to fall off the fiscal cliff. Then we're in free fall, and then nobody knows what the outcome will be. Nobody knows where the deficit before borrowing will go, and nobody then knows what will happen to civil service remuneration. We can really reach the point where the government will
But you're rational.
We can reach the point where the government will lose its ability to pay the salaries of civil servants. That it will simply not have the money to pay it, and we want to turn this around before we get to that
I suggest we need to take to the ANC Secretary General, Esma Hashule, and have a chat with him and see what he thinks about that. That might be an interesting conversation. Let's go back to London. Peter, we're asking the question here in Johannesburg, if this is South Africa's Margaret Thatcher moment, if you like, and the likely consequences of that on the ruling alliance and the likely consequences of that on South Africa's political future.
Well, I think there's definitely an element of that. I mean, what we're seeing here is, I think an attempt to utilize what came out in the COSATU paper that went into the NEDLAC Presidential Working Committee process, which was a recognition that there is a crisis at SOEs, there is a crisis in the fiscus, and trying to come up with the options and strategically try and sort of bend that back on the public sector unions to say, well, actually, this is what has to happen. And this is the leadership that's been provided in particular by National Treasury. But no, I mean, it's far from clear that there is an ability to reach these levels, given how they distributionally will have to be set. You'll have to see cuts at all levels of the civil service, which COSATU has ruled out in that paper. And you'll have to, I think, see to reach these numbers as well, some degree of early retirement or faster attrition in the public sector to reach these kind of levels. So that's really where it becomes very difficult. The budget actually is incredibly light. The document goes into no details at all. They've kept their options open on this, but this is going to come to a head very quickly. They're penciling in those 37 billion of cuts for the next fiscal year. And we saw last night them entering the bargaining chamber to start this process. So I think this will come to a head pretty quickly, and before the sort of November expected start date for the next 3-year cycle.
Peter, I have to ask this question. Do you think Mboweni has overplayed his hand here? Do you think he will survive this?
So there's a strategy point there, which I think it is correct that the move that he's done is to strategically throw this ball back into the union's court. It shows an interesting move by the president, I think, will have backed this
as well. But if he will actually deliver this, no, I don't think he will. I think this is far too optimistic. I think we should remember that this has happened time and time again. I remember previous wage rounds where Treasury would pencil in more restraint. You'd go to them and say, there's no way this is going to happen, and they would sort of stick fingers in ears. Then indeed they would have to revise up expenditure levels, and lo and behold, have to sort of concede some defeat. And I think we're in the space for that to happen again. So I think we will see some trimming around the edges. I think some savings will be possible, but the 160 seems far too high.
I was going to say, before I leave you, Peter, I asked the question, has Mboweni very cleverly seen that there is no way, and I am saying it very loudly, there's no way that the unions, as well as that wing of the ANC, will risk a firing of Tito Mboweni? South Africa couldn't afford it. Could this have been perhaps how he played his hand?
Maybe slightly, but I think I think Tito knows there's probably no love lost with him around his paper. In particular, the pushback he got and the lack of receptiveness for his paper, I think, probably shocked him in National Treasury quite a lot from the left, and indeed the lack of engagement in it at all in its early sort of iterations through the middle of last year. And I think the sort of issue of him being out the door or not, I think doesn't really particularly play on the minds of the left. I think they would rather see him gone. They would rather see someone who's much more open to expansionary policy and spending increases. Remember, the left and in particular the unions are backing here a 500 billion fiscal stimulus. That's what they wanted to see. That's what their stated position and policy line is. And let's not forget as well, our dear finance minister is not afraid to walk out of the door either, and he likes to keep telling people that he's doing South Africa a favour being finance minister. So I think this is him very much laying down the line, saying this is what we have to do, and otherwise the consequences will come, both in terms of ratings and in terms maybe of his position.
Absolutely. And I think he would be very happy to go back to his farm and grow that cannabis, which he didn't talk about, by the way. Peter Atad-Montalto, thank you, in London. Let's go to Cape Town before we come back to Johannesburg. Rashad, so I am putting out, let me call it a red herring, if you like. If Tito Mboweni were to be fired, what would be the impact on the capital markets from your perspective? To what extent is the market priced in Tito delivering on this? And how much
I think it will very much be dependent on what the circumstances of and who replaces him. So, he's kind of put his head on the line and says we're going to try and get this 160 billion of cuts. COSATU, I think, as part of a negotiation strategy, their first response must be to say, look here, this is unacceptable. The question is whether they're more reasonable and you come to some sort of reasonable type of salary freeze in real terms, or hopefully in nominal terms, even at the higher end, to help him achieve some of these targets. And for now, the market is giving us some time to fix ourselves. There was talk of the fiscal cliff in studio earlier, and I do believe that's a risk for us, where we get to the point where we can't actually just turn this whole thing around. But for the moment, you look at where global yields are. Negative in Europe. The US 10-year hit an all-time low of about 130 yesterday. So 1.3% on US 10-year. You look at where our bond yields are at about 8.7. There's actually quite a significant margin at the moment, and our bonds are looking attractive. So what that does do, it gives us some time to turn the ship around. But I do believe that we have to stem this debt trajectory. Otherwise, we are going to hit that fiscal risk at some point in time, whether Tito Mboweni is there or not.
Sorry, very quickly, are bonds fully priced at these levels, given the move that we have seen today?
Look, yeah, I think we think that bonds are slightly still a little bit cheap. There is a very substantial risk premium in our bonds versus global yields. But given the rally we've seen today, if there is a little bit more, I think then you can say they are fully pricing in this optimistic scenario. And then in the next few months, I think they'll get a little bit nervous as we head closer. And the implementation, we'll need to see a lot more evidence of implementation, how these wage negotiations are actually going, because if that's the case, and we get this 160 billion, we still have quite a poor debt trajectory. If we don't actually get this 160 billion of cuts, the debt trajectory is going to look even worse than expected, and then I think the bond market's going to be a little bit scared.
Rashad, go back and join the party. Thank you, Rashad Tayob, fund manager at Abax Investments in Cape Town. Let's come back to studio. Gentlemen, so we have heard the view from London in terms of what the minister has done. I want to go back to him before we talk about the other things that we need to chat about here, the State Bank, the Sovereign Wealth Fund, South African Airways, as well as the SAB and Moody's. So 5 items that we need to go through very quickly. Can I begin with you and ask the question? Is this an opening gambit, if you like, from that side of the ANC, and that we are likely to end up somewhere in between, as we have always seen since we got majority rule here in South Africa?
Well, if we move specifically in terms of the civil service remuneration budget, as I've said before, the deficit before borrowing will go well over 7%, might be approaching 8%. So there's a cost in everything, and if we start pushing 8% deficit before borrowing, there will be a downgrade waiting and the markets will respond negatively.
You cannot afford to fail, right?
I think that's 100%. I mean, you get the strong sense that the minister's pinned these colours to the mast.
100%.
And give or take a few moves on the margins and so on, this is what it's going to take.
So he will threaten them with walking if they dare touch him, and this will also strengthen his hand in terms of what he has to do if they can't fire him.
Well, I think that's certainly part of it and so on, but as I was alluding to earlier, it's the question of are they ready for the war if it's going to come?
Yeah, and the question becomes, do we really think that civil servants at this point in time
have the appetite?
Whether they have the appetite for a prolonged strike, or whether the strike will peter out around about the next payday. Because you must always remember that the average middle class South African is only one paycheck away from poverty. You don't get your paycheck on time, the next month you are in serious trouble. So the minister is probably also taking a gamble on the assumption that the average civil servant would not have capacity and appetite for a prolonged strike. There might be a 1 or 2 or 3 day strike, but it will peter out soon.
Yeah. You see me going through the pages here. I'm trying to find the page where the minister spoke about the establishment of the Sovereign Wealth Fund. The question I'm asking is the believability of the sources of the funding for that Sovereign Wealth Fund, set at about $2 billion. I think it's better to use that figure because of the moving rand exchange rate. The minister, I think one of the things that he mentioned in terms of how that's going to be funded was that this could be coming from the spectrum sales, yes, and also I think royalties from the mining sector. Do you buy that?
Yeah.
The time frame as well? Did you get any sense of when that would be?
Well, he hasn't given a time frame. So he talks about a
10 years.
target capital amount of about 30 billion rand and so on, which is extremely small for a sovereign wealth fund anyway. But yeah, in terms of the timelines, we don't know how we're going to get there, or when we're going to get there. We don't know how we're going to get there. And you're right. He talks about proceeds of the spectrum allocation and so on, which might be about 5 billion rand in the next year or so. It talks about petroleum gas. Well, we don't have any of that at this point in time. Mineral rights royalties, but bear in mind we do have mining royalties currently that are there, and they're generating in the region of 11 billion rand.
And it's just being swallowed inside
but
that
it's
big
going
black
to
hole.
it's going towards servicing the deficit at this point in time. He talks about the sale of non-core state assets. I don't know what assets those would be at this point in time. Maybe that's some of the properties we're talking about.
They might include South African Airways.
Well, that we must simply give away, as I've said 5 years ago. But please, what I really liked in the Sovereign Wealth Fund is future fiscal surpluses. That's coming from a minister that's projecting deficits of 6.8%, 6.2%, and 5.7% of GDP over the next 3 fiscal years. So clearly the minister sees a good trajectory.
Don't be too harsh on him. When he took over as central bank governor, there was nothing in terms of reserve for South Africa. He built up the foreign exchange reserves of this country to more than $40 billion. So this is not meant to be trifled with.
The timing of the Sovereign Wealth Fund is extraordinary, to say the least. It would have made sense perhaps 10 years ago when we were in we did have surpluses and so on. And when we started with the mining royalties,
Yeah.
that we did.
Well-
And if we'd done that, we would have 60 billion rand in the fund today.
Yeah,
For sure.
Although I've looked at the gold price recently, and if this trajectory of the gold price continues,
Yeah.
that might give us the windfalls that we are hoping for.
Yeah, I'm going to say, Anglo Gold, come back. We need you to be paying royalties. Gentlemen, we've run out of time. Thank you for being a part of this conversation. Before you go, you got to tell me, though, what's going to happen March 27. Downgrade from Moody's?
At this point in time, it seems to me that we've done enough to stay a downgrade, and that it will be kept in abeyance.
I agree with Yanni. And I think the rating agencies are going to wait until November to see how things pan out in terms of the wage negotiations and go from there.
So we'll have to say that Annabelle Bishop from Investec, she put out her hand right very early in the market. I think it was a week or two ago. She said they don't see a downgrade come March 27. Here we are. Potentially, there might be no downgrade. Kyle Mandy, PwC Tax Policy Leader, thank you, as well as Professor Yanni Rousseau, Interim Head at the Wits Business School, for help us to understand the very complex document that is the national budget. We shall be talking about this, of course, for a very long time. But we've got to say the key takeaway has got to be that the minister brought a gun to a gunfight without question, and he is going to need it. Perhaps he needs a bazooka, or perhaps he needs a laser gun. I don't know what he needs. He certainly needs a big one. Before we go, quick check of where that rand currency is sitting at the moment. And I can tell you that gain has not been lost at all in the time that we've been talking, and we're still talking about a gain of more than 15 cents to the dollar. Thank you for watching.